Hey guys, critical information ahead of market trading on January 19th. Couple of things to keep in mind today, guys. Do not be the slave of the price action. So many of you watched this meteoric rise in the last a couple hours of trading yesterday. And this morning you're like, well, shit, the market is up again, 20, 30 points. And you're probably thinking, well, God, well, certainly we're going to go way fucking higher, okay? So some critical information to consider. It is the third Friday of the month on which your monthly expirations expire. And if we go back 20 months, there has not been a day on a Friday where the market has gone on the third Friday exponentially higher, and it has not dropped exponentially lower. So for those of you that are going into today with very high expectations of the market going as strongly in either direction, whether you're a bull or a bear, that is definitely something to keep in mind. So we can easily get plus minus 20, 30 points on the day. Now, considering we're already up 20 for the day, what do we want to do? Well, there's two things now to look at. Is first, let's check the temperature with multiple time frames. So let's go look at the 5-day, 15-minute chart and take a look at that real quick. And so what we're getting here, well, hey, recently, not so long ago, we're at 48.38. So the question of the day, are we going to break above the 48.38 level? Probability, probably not that strong, considering that we are getting up here for the third time. And if I was to pull up on stock charts, some of the other time frame charts, I've been pointing out to this bear divergence that is present in 99% of charts right now. So considering some of the bear divergences that we're observing, plus some of the macro conditions that we're reading in a slightly different way from what most of the market participants interpret them, such as yesterday, I posted like a 60-second video, but this is going to be a little bit of a lengthy explanation on this. So basically, not so long ago, like 48 hours ago, we're getting the retail sales data, which is actually higher than expected. On the same night, Discover Financial announces their huge concern for delinquencies and how they literally have to set extra money aside because the amount of debt is accelerating while the number of delinquencies is also accelerating. So the question here is the consumer spending, which is associated with a higher retail number, all the money that was spent over the holidays by consumer. The question is, did all of that was due to everyone maxing out their credit card? And basically, if you listen carefully to what Discover Financial or Discover Credit Card said on their earnings call, there are concerns around that. And so it's never good when you have the highest credit card debt. It comes as a result of people maxing out their credit cards at the same point where people with good FICO scores, 700 plus, which is basically who Discover issues credit cards, are beginning to default on their credit card payments. Now, credit cards is unsecured debt. It's not like your mortgage. So the first thing that goes, like if we look back in not so distant history in 2008, it was the credit cards that people let go first. Then comes your car loan, and the next thing is your mortgage. So we're seeing early signs of a 2008 at the time where credit card debt is at all-time highs, and delinquencies are starting to spike. And this is not just the first warning signal from Discover Financial that we've seen. This is the third quarter in a row. I've recorded the video on that yesterday, and I said, hey, 3 strikes, you're out. So we can ignore 1 quarter, we can ignore 2 quarters, but now it's 3 consecutive quarters that express concern about delinquencies. Guys, I would not ignore that. At the same time, we have a combination where market trades close to all-time highs within days from a recent high. So what do you make out of that? Let's take a look at a longer time frame here. So we're on a 10-day chart. And so not so long ago, right, we're at 4,700. We're 130 points roughly higher. And anytime we've gotten to this level, at least just looking at this reference point right here, guys, I mean, we sold off pretty quick. And it was last Thursday. So going into next week, this level today, considering we're not expecting a huge breakout to the upside, considering we're not expecting a huge, we can get an easily revisit of 4,800 at some point in the day. We're expecting a move too, maybe a smaller version of a move too, but the highest probability on the 19th, on a third Friday, it's most likely like market's going to be wobbling plus minus 20 points. So again, don't have elevated expectations. Now, stocks like DWOC, okay, which we've been highly bullish on. I've recorded a couple of videos on it. I mean, that's the stock you want to be bullish on because it's not market correlated, right? If you want to be bullish on something, go with something that is not market correlated and go with something that's been suppressed for a long time, such as oil. Oil was trying to break out earlier in the morning, currently at 73.71, still represents a great entry level right now on oil at 73.70. Got nice uptrend. Struggled to break below 70 level, while expectations for it to break the 70 level were really high. So we're seeing a lot of bullish divergences on oil. So we're staying with oil calls going into next week and next month. We're staying with DWOC calls. But as far as the market overall, guys, I mean, you can't ignore. I mean, this is a level. This is a level the market struggled. Let's even go 180 days, and that's going to give you in perspective, right? Okay, so this is 1, 2, 3, 4. At this point, okay, I mean, this is a very dangerous setup because the market could easily fail the fourth time around, and if it does fail the fourth time around, the move to the downside is going to be lightning fast. And before you know, like, we're sitting here at 4,400, 43.50, and you're like, what the fuck just happened? So opposed to going with the calls on a day like this, when you wake up and everything is green, and the price action is green, and of course you're going to look at stuff like Nvidia, or it's like, oh shit, oh my god, that's green again. And you're going to look at SMCI, which probably calls for a separate video. Oh, it's green. But you can't just look, okay, it's green, but like, you cannot ignore this. This is the same level SMCI has sold off last earnings report. Now, we cannot clearly expect the same type of sell-off on the same type of, normally you don't get quarter to quarter same type of reaction. So, but we could still, considering that this is a pretty strong level for SMCI, considering that recently we've been posting videos SMCI at 334, 344 area, we were shorting it here. Nice drop. We've caught that trade almost close to 300 level. But guys, this pop is very shortable in SMCI. So any move to the upside, so if you see it bounce at the open to a level of 357, even 363, there is a major level of resistance here. There's people that were buying it like crazy 2 quarters ago, and they got killed. I mean, the stock literally drops from 350, 360 to like, I mean, we're talking about 10 trading days, 230. I mean, from 360 to 230. I mean, this is the kind of stock you want to be trading options on because it moves, and it's got a historic precedence on when it moves a lot on a couple of days consecutively. So maybe SMCI is not going to make as huge of a drop as it did 2 quarters ago, but this level coincides with what? With S&P trying to clear recent highs. So I think on a day like today, the probability of a breakout is diminished, but it gives you a really good entry point, right? It gives you a really good entry point against these levels. And especially on a day, right, when we're starting up, when the market is gapping up 20, 30 points, I mean, that's a beautiful setup for a move too. So, which you short the bounce. And so Apple, okay, Apple clearly, I mean, that's an easy one. Apple's got an event going on. They're launching their competition to Facebook goggles, whatever, virtual reality. And if you look at history of most of the products that are being launched, they normally come with a sell-off shortly afterwards. So we've recorded the video yesterday saying that, look, 188, it's a great entry on put side on Apple, and that's probably going to remain a great entry today. So on any spike, as I mentioned yesterday, can it go a couple of dollars higher? Sure. But this represents a great entry on the short side, because all these fund managers that are returning from Davos, okay, guess what I think they will be doing Monday when they're back in front of their computers? They will be selling the fuck out of positions. So bounces are to be shorted, especially on something that is so poorly positioned going in 2024. You get one upgrade, you get a huge reaction. You want to see what happened to a stock that recently got upgraded, which we actually really liked. We bought a ton of it at the end of last year, mRNA. Let me show you a recent history of a stock that got upgraded. So this is an upgrade basically on the first trading day of 2024. And we were buying calls on this, no, we weren't buying it at 75, but we were buying calls on mRNA right here. We've got in at the perfect moment and just got a little, I mean, if this happened a day earlier, I mean, that day would have had 7-8 guys that would have hit over $1 million on this trade. But so it didn't do it last year. It didn't do it on the last day last year, but it did it on the first day this year. So basically mRNA goes 15% higher in one day on an analyst recommendation. And you can clearly see what happens next. So within 2 weeks, the stock is back to where it was upgraded by an analyst. And I think the same thing is going to happen with Apple. So what do you do with an opportunity like that? Again, don't be the slave of the price action. You see all this green, and let's put it in perspective. I mean, this is what most of you are looking at. You're looking at this one-day chart. Oh, Leo, 182. Oh my God, we're hitting 190 pre-market. This is it. I'm fucking buying Apple calls today. The Apple store is going to sell out of that new product. I'm buying. And so this may last for a few hours. This may last all day today. I mean, Apple may go a few dollars high. But what's going to happen next week is the stuff you got to be looking at. And in terms of a real trade here, okay, can you catch maybe a little bit of an upside? But why chase $1 or $2? You're much better off looking at the overall bigger move here, which is not a move higher. Okay, how much higher can Apple go? It's got so many headwinds. Okay, when we posted our video on the best 10 stocks to short for 2024, okay, Apple was on the list, and it is still on the list. And this represents a great shorting opportunity. So, I mean, if we go back, let's say 20 days, okay, this is when we were shorting Apple right here, 197, 194 area, before it basically dropped into 179, 180. So since then, this bounce, right, it bounces once, entry, $5 lower, exit at this level, bounce, okay, coincides with the run up into what? Event. What is the event? They release a new product today. Normally, it's the hype, okay? What is the new product that's been recently released on the market? Bitcoin ETF. What happens? Well, just for comparison purposes, so you understand what is the next big move in Apple, right? Let me show you and remind you what happens to Bitcoin after the event is over. So this is the day of the event and the next morning of the event, and this is what happens next. And you guys watched all of our Bitcoin videos. We nailed this prediction accurately, precisely. We didn't short the top at 49, okay, but we got pretty damn close to it, 47.5, 48.5 area. And so since then it's down 8,000 points. So don't be surprised if after today, when you pull up the charts next week, you will see Apple chart looking like this. Now, I've given you an mRNA example because it may take 2 weeks for Apple to unwind recent gains, right? So mRNA shoots up 15% in one day. Very similar action to what Apple is going through right now. Same catalyst. What is the catalyst? Analyst upgrade, triple top, sell off back to the same level. Okay. And this is what's likely to happen to Apple. So, I've given you some powerful insight, guys. So you want to make money on Apple. Today is your entry. You short it. I just given you the time frame, which is very safe to buy Apple puts. So you would be buying Apple puts going into 2 weeks. And I just given you the strike price, whether you realize it or not. Unfortunately, I have to break some of these guys because people will hear say, "Oh, Leo said short Apple," and they'll go fucking buy 150 strike. Leo said Apple can drop to 130 by the end of 2024, and they'll go and buy 130 strike puts for next week. That shit ain't gonna work. So what I just explained to you, right? Let's break it down one more time. Okay, so mRNA jumps 15%. It takes it 2 weeks to unwind the gains. And in the middle of it, it's still making some bounces. Now, with Apple, it may not make bounces. The reason I showed you BTC, right? Because besides the upgrade on Apple, we also have the event. And so all this hype yesterday, we're not 100% sure if it was all just due to the upgrade or it was because Apple was going to start selling a new product today. So considering in 80-90% instances, you're going to have this after the event, which is the new product. So Apple could unwind its gains from yesterday in a much faster fashion. So, but considering the mRNA example and considering the Bitcoin example, so Apple can easily unwind most of its gains, or all of the gains that were produced in the last 2 days, last day, over the course of the next 2 weeks. So you wouldn't necessarily buy a strike price that is like crazily out of the money. You wouldn't be going looking at this chart buying a 150 strike put on Apple that expires in 2 weeks. Even though, considering we believe the market crash will take place in the next 7 to 14 days, there is a chance it could get there, but there's a very low probability. So as Apple is shooting higher, if you want a safe trade, you go 190 Apple puts, 185 Apple puts, 182.5. Basically, you want your strike to be above your target price. So if we're considering that Apple is going to raise all the gains in the same fashion that mRNA did in the upgrade, basically your target price would be 180. That if Apple unwinded all the gains recently produced, it would at least revisit this level here of 180. So therefore you want your strike price to be higher than your target price if you're trading puts. Guys, so it's just some observations ahead of the market open. I'll post some more videos, but let me just get this one out of the way. If it's helpful, hey, shoot us an email, schedule a call, talk to a senior coach here. But again, the point of this video is it's the third week of a Friday, so don't expect a huge move to the upside or the downside. Your strategy would be will produce much better results if you focus on what the big move overall is going to do rather than focusing on the current price action. Because the big money in trading is not going to be made on where the stock goes in the next 5 to 10 minutes or even 20 minutes or an hour. The big money is made on the overall biggest size move. So the biggest size move right now, considering we started the video showing you a potential of a double top today in the market, okay? If we get to 48.41, guys, I mean, this is it. This is your holy grail of shorting, 48.41. Now remember, this one I showed you earlier was 48.38, okay? So we can easily get an overshoot. So if you see the market at like 48.45, I mean, it doesn't mean all of a sudden it's going to go to 4,900 today or Monday, okay? What it means is you got really lucky as a short seller because you get a chance to short the market at all-time highs or close to all-time highs, or at least all-time highs on this time frame, okay? At the same time, when there's clear warning signs, I've started recording these videos on bear signs. There's so many bear signs. We have one sector, a rolling over, after another sector. We've got clear support of evidence for inflation to go higher. At the same time, got different regional PMI numbers for manufacturers. They're dropping off, and some of them are dropping off in such a proportion we have not seen since 2008. So this is very dicey. For those that want to play this market on the call side, hey, at least I've shared some information with you that we're looking at here. It's your decision what you want to do, but I can tell you that we here at 13 Market Moves in no shape or form are buying calls on this fucking market. I think it's pure insanity. Now, you can say, but hey, the AI stocks are going to keep driving the market higher. Well, it's the stocks like NVIDIA, they're going to keep pushing the market higher. As far as NVIDIA, guys, sure, they keep pushing it higher every morning. But guys, I wouldn't be shocked if all of these gains on semiconductor sector got wiped out over the course of next 2 weeks. I wouldn't be shocked if NVIDIA erases all of these, okay, despite of how much money was put into the stock. These reversals can happen lightning fast. The market is in a severe, severe danger zone. And we've gotten to a danger zone in the VIX, guys. Yesterday, a couple of times, we were like here at 14.8, 14.8. Yes, pre-market, the VIX is down clearly. I mean, the market is up 20 semi-points. But this level on the VIX could be revisited. And this is the danger zone. 14.8, 15.2, 15.4. This is a danger zone because that's the zone from which historically VIX can fly. I mean, I think we're just days away from VIX hitting 25, which you wouldn't think, right? If you just look at the price of action on the VIX, again, do not be the slave of the price action. Focus on the big move. Focus on the next move. Focus on what is happening next. Not on what's happening today, but what is happening next. And what is happening next over the course of the next 7 to 14 days, VIX is going to break the fuck out higher. Oil is going to break the fuck out higher. Okay, DWAC, DWAC is breaking the fuck out higher. Everything else, it's a short. It's that simple, including the semiconductors. But more details and some new videos, guys. If you have any questions, okay, if you want to put together a solid options strategy on short-term options expiration, meaning next week, next 2 weeks, you want to try to capture what is possibly, we view here at 13 Market Moves, as a high probability of a flash crash. Yeah, we have not had a flash crash in like forever. And the fact that the market cannot drop by more than 60 points now, we're going on month 13, the probability of flash crash is highly, highly elevated. And it comes at a moment where the market is beginning to realize, hold on, inflation is not going to go lower. Hold on, Federal Reserve is not gonna lower rates by 6-7 times this year. Slowly but surely, the market is beginning to realize that everything they have bet on over the course of last 60 days of 2023, they will have to unwind it. And sometimes the market will have a delay effect, right? Delay effect, such we have the delay effect in the market with oil prices right now. But the longer the delay effect takes place, the bigger the size of the move. It is for that reason I'm stating that VIX literally overnight can go to 2025. It is for that reason that oil literally overnight can go to 80, 85. It is for that reason that the market, you're going to wake up, it could be at 43, 4,400. And we were just looking at which levels? 48, 35 right now. So market went another 5 points since I'm recording this. So we're getting within 3 points from this high, and we're within 6 points from here. So you got to be looking at all these green candles saying, holy shit, I mean, this is a blow off top. We're going fucking higher. And so this is one of these psychological moments where you got to say, look, the highest probability moves this year are move 2, 3, and 11. And so since we're ruling out the 3, okay, we got probability of a 2 and an 11 today. And that is our strategy here at 13 Market Moves. Now, we could get it wrong today, sure. But we're not going to change the strategy just because the price action is so fucking green, okay? It's going to make some of the short sellers puke today, okay? That's fine. But we've done this again and again and again. And this is how you nail market tops right before the reversals that everyone will be telling you. They say, wow, how the market was so bullish last week. Can't believe everything's falling fucking apart this week. Oh my God, I wish I bought puts last week, but I bought fucking calls. Okay, don't be the slave of the price action. This is your moment as a short seller to get perfect entries today, January 19th, because by February 6th, the market will collapse the fuck out. So if you want to trade these moves with 13 Market Moves, go to 13MMTV right now, schedule a call, talk to a senior coach today. Just click the orange button on the website that says schedule a call. Cost you absolutely nothing, guys, but do it today, because come next week, you could be looking at this. You could be looking at a straight chart lower. And by the time you're going to decide, oh, hey, it's a great idea now to buy puts, you will be paying 5 to 10 times more for the same puts that we will be buying today. So do not miss this unique opportunity where market is at all-time highs, or pretty much close to all-time highs, while all these bearish divergences I've been trying to spell out in the last few videos are definitely present in 90% of the charts. This is your chance as a short seller to short the top. Do it with 13 Market Moves. I'll see you guys in the next video soon. Let's roll.